Paying tax is part of business. With smart planning, you stay compliant and keep more profit. Hong Kong taxes profits that arise in or are derived from Hong Kong. Offshore profits may be exempt. Source is a practical question. We ask what activities made the profit and where they happened. For trading, look at where contracts are negotiated, concluded, and enforced. That drives the profit source. Manufacturing profits follow the place of manufacture. If split, profit may be apportioned between locations. Service income is sourced where the service is performed. Work done in Hong Kong is taxable here. For e-commerce, core physical operations matter, not just the server. Keep documents to prove offshore activities. Consider director fees with real substance. Use debt where interest is deductible. Review old debts to write off. Check for missed accruals. Claim 100% immediate deductions for prescribed fixed assets. Some R&D may get extra deductions. Know where profits come from, keep strong records, use allowed reliefs, and review each year. Your plan is complete.